Will, here's the first question. How do startups get funded and where do I start? Let's just get to the basics and give an introduction because we have new founders come to us all the time and they ask this question.
I think a lot of people, mentally equate looking for funding with like a mortgage application. Almost like I have to check all the boxes, fill in all the information, submit it, and then wait for a response. Right now, I don't actually believe everybody thinks it's a mortgage application, but they have this idea that it's a little bit more structured than it actually is. Right. And Ed, as you know, it's a bit of the wild, wild west. There is a process to follow, but you can follow the whole process and get nowhere. Right. And so what we try to explain to people is this is a process which for every one check that's going to get written, there is at least 100 people competing just for that one check. Okay. This isn't a version where the bank can just say yes to everybody if they fill out the requirements. It's highly competitive. And so you have to take that idea, you have to distill it into a pitch deck, which is 10 to 12 slides, and you have to get it in front of exactly the right investors, and most of them are the wrong investors. That is a whole process that no one understands. And why would you? Why would you understand how to raise capital, right? You don't sit around at barbecues and talking about it unless you live in San Francisco. I mean, generally speaking, everyone's doing it for the first time, and everyone gets it wrong. That's our job to help with that.
Let's break it down into the building blocks, Will. You've already mentioned. So there is the startup, which has you as the founder.
Yeah.
And then there are investors. Now, there are different types of investors that I think many founders get that confused. I was talking about it on the podcast I said, the first mistake that founders make is thinking all investors are the same. So what are the different categories of investors that founders can think about?
Yeah, so I think that's the biggest challenge is, we see something like Shark Tank, which I love Shark Tank for what it is, but it's such a gross misrepresentation of how capital raising and investors work. But I think that's how a lot of people think it generally works, that investors are just this generic amorphous title that if I'm an investor, I can invest in anything of any amount, right? And if you just convince me that your idea is great, I'll just give you all the money that you need. Investing doesn't work anything like that, like not even remotely close. It looks more like this. There are different stages based on how far along companies are, and there's different investors that invest at specific stages. Within those stages, like if you're at the idea stage, what we call the pre-seed stage, there's also specific investors that only invest in healthcare, that only invest in consumer packaged goods, that only invest in SaaS. And they don't invest in anything else. So if you're out there and you're looking for investors and you're like, well, I'm looking for any investor that might be interested, it's a huge waste of time because only a tiny percentage of all those investors that are out there are even remotely interested in your business.
So to double click on that, first, there is the stage of investor. And let me just explain to all the founders out there, this entire early stage pre-seed, when you're just at the idea, that really is the Wild Wild West. There's very little organization, maybe some angel syndicates. An angel is someone who may come in at those early stages. But even at that point, say you're talking to an angel, maybe they got rich, they bought Bitcoin at $300, they got some money to YOLO around, or most angel investors do it as a hobby. And I think founders don't understand that either. There are very few relative to the number that are professional angels, and then they'd probably be joining a fund, maybe an early stage fund. So those structures are different. And then every investor or fund has an investment thesis saying we're looking for investments in fintech, in blockchain, in video games, whatever. And we need a certain type of criteria to write a certain type of check. So they may say, we're only writing $500,000 checks or $50,000 checks. And the founder, your job is to go out and learn about those investors versus just thinking, what do you mean Mark Cuban's not just going to pick up my call, right? You have to go learn and figure out how to approach them, which starts off with a pitch deck. How'd I do with the introduction?
Yep. And so essentially your pitch deck is taking all the ideas in your head and formulating them into a very structured pitch that investors understand. It's saying, here's my competition, here's my market size, here's the team, etc. And it's in a format that's short and punchy. And that is the next step. If you're looking for funding, you put everything into that pitch deck. You make sure you get it right. That's where we come in to kind of help you walk through that. And then you start reaching out to those investors. But you don't just reach out to any investors. You reach out to the investors that are specific for your stage, your industry, and everything that makes sense for you. So you can have the highest probability that you actually get funded.
You bring up pitch deck and, plug. We have a full course on how to do pitch decks, everything. We've created a course because it's pretty much the same principles people are asking.
Yep.
But what is the first step in learning how to do a pitch deck? Where do I start? I've heard I need a good pitch deck, but where do I start with getting that pitch deck ready?
Here's what you don't do. You don't go online and Google pitch deck template and then try to start filling out a pitch deck. Everybody does it. I mean, to be fair, everybody tries it, right?
Exactly.
And it fails miserably. We get millions of these. And every time we see them, you can always tell. The analogy I give is downloading a template and trying to backfill the words is like downloading a book and trying to rewrite a new book based on what was in those words previously. It works never. And it usually winds up being a really crappy pitch deck because the template doesn't tell you what you were supposed to say. You see words and you're like, oh, I guess that's it. What you need is a prompt on every single slide, problem, solution, market size, etc., that says this is specifically the question to answer, and here's specifically the format to use when you answer it. That gets you halfway there. Okay. The second half, as Ed, you can appreciate, is now show it to people that know what they're talking about.
Yeah.
Right. Or in the absence of that, show it to literally anybody but yourself and see if other people understand it, get feedback and iterate on it. That's really important.
Now I've got pitch deck. So I've gone on Access to Resources, and Will, you and I could give like a week-long course on pitch decks alone, right? So I've gotten that. I've got it figured out. I'm accessing all the resources with my pitch deck. I gotten feedback. People were like, okay, it makes sense. And then right after that, how do I actually contact the investors?
Everybody thinks that like, oh, I just want warm introductions to investors, which is awesome. And if you can get them, by all means, that's great. But you've got to understand the average deal has at least 6 investors in it for every round that you raise. So what's the probability that you're going to get warm introductions to call it 30 investors that gets whittled down to 6 to 10 that invest? Almost nothing.
Not gonna
so
happen.
No matter what, yes, by all means, if you have a couple of those warm introductions, mine those. What's the probability that the warm introduction happens to be exactly your stage, your industry, et cetera? Probably pretty low. But by all means, mine those. For everything else, you got to go out and hustle it. And what does that mean? That means I'm going through LinkedIn to reach out to people. I'm emailing people. I'm sending them DMs on social media, et cetera. There's a million ways to find investors. They're not hard to find. Doesn't mean they'll respond, but they're relatively easy to find. And we have folks on our platform. We're like, this is exactly how to do it. Doesn't guarantee the response like anything else in life, but this is exactly how to do it.
And if you have done all your homework up front, you've right-sized the round, you studied the investors, here's the great part. Investors want to hear from you. They actually appreciate.
That's their job. Yeah.
Like a lot of people think, oh, you know what? Yeah, Mark Cuban's going to ignore a stranger emailing them. But investors, that's their job, is to find deals. So if you contact them, investors answer their emails, they read it. If you have targeted them correctly and you're not annoying them, or you're making sure you're not sending them like a big novel of all the different things, you are doing it properly, investors will respond. And that's the best part if you've done all the work up front.
You bet. And the thing is, there's so many nuances to this. It's, okay, I'm going to send out an email to an investor. Which investor do I talk to? In other words, maybe there's 4 people that work there. The obvious thing for every founder is, well, I want the most important person. I want to reach out to the decision maker, the managing partner of the firm. That's the last person you're going to end up talking to. I mean, if you want to guarantee failure, email that person first. What you're looking for is an associate, somebody on the front end whose job is to talk to you, whose job is to bring you into the firm. So a lot of folks, they wouldn't even know that, right? Again, the logic would go to decision maker, go to the top. That works never. The other side of it is when you're putting an email together, people write, oh my God, I mean, Ed, you've seen a million of these, the most crazy emails, right? Best deal ever, deal of a century, all caps, right? And what we try to explain is nobody's looking for a novel. No investor has ever said, man, I wish this email was longer, right? They're all looking for you to get to the point really quickly. When we coach folks through this, we're like, okay, now say this in half the words. Okay, now say this in half the words, right? You're not trying to sell the deal, you're trying to get a meeting. And so I think the nuance of all those little details about how to go about it is lost on a lot of folks.
And raising funding, I believe it is a thankless, insufferable process. It is not fun. It is a grind. Well, what advice do you have founders out there, like new founders who are just learning about this? How can they mentally, emotionally prepare so that their expectations aren't all out of whack and they become embittered founders, which we see a lot of? How can we prepare?
Look, treat it like a sales process. Treat it like a sales process. I think when people think about it like that, like there's a top of funnel of sales prospects, and I'm only going to sell a certain amount. If you talk to anybody in sales, they don't expect to sell 100% of the people they're going to. They expect a lot of people to never respond to them. That's really closer to what this is. When I talk to founders, and Ed, I'm sure you do too, who actually are salespeople, coming from the sales side of the business, they get this so well. And I watch their processes, and I always got to give the Canadian version.
Thank you.
Yeah. And I always think to myself, you're going to raise. You're going to raise because you understand how this works, that you're going to get lots of no's, and this is all about trying to get people down through the funnel.
We've seen founders come in and hustle, and they are relentless, manage their CRMs, and constantly going out there getting momentum, and they're not deterred. They just get a few rejections. They don't stop, and they keep doing it, and we've seen some very successful raises here at Startups.com.
You bet. And what's funny is people come to me and they're like, well, I've already sent out 20 emails. I'm like, cool, what'd you do for the second 20 minutes? Right? Like, Again, I don't think they understand like how wide of a net needs to be cast. It's hard. Look, like, and you and I joke because we've just seen it a million times. It's hard. It's hard stuff. Okay, but that is the process.
Right. And they also say, yes, I've got 1 week to do this, and I'm going to go raise $2 million because I've got
Right.
no runway. And I say, okay, so have you booked your babysitters and gotten your replacements for the next 6 to 9 months? Is pretty much what I say. And they're like, what do you mean? And that's just the reality. The cycles are different. We just came through kind of a nuclear winter. It's super tough. And so be prepared for the long haul. In fact, Will, I tell founders, as soon as you raise and start raising, like you are doing that for the rest of your startup career. That is your job. Yep. It never ends.
It never ends. And there's no fun in funding. That's always what we say, right? And I think when you think about what it is, this is selling customers all over again, right? You just think of investors as another customer base that you need to sell into and treat it as a sales process and treat it as something that takes a while. It's a long sales cycle. There's no way around it.
Let's answer a question that we got related to this funding. It says, hi guys, I'm currently still in the process of building my product with a hope and expectation of launch in March. My question is around fundraising. I'm bootstrapping everything right now, which is working out fine. I fortunately can afford to build the MVP and launch. However, nice. I've received mixed messages that I need to raise funds now. My inclination is not to ask for funding until my app has been validated in the market. Is that the right way of thinking, or should I prepare fundraise now? I'm afraid of fundraising now will decrease my leverage.
I love that question.
It's a great question.
I love that question, right? Because I think it shows a lot of good intuition, which is, won't people want to buy my thing, so to speak, invest when there's more to buy, right? When I'm further along, and the answer is yes.
Yeah.
Now, there's this really cool thing that happens when founders take a little bit longer before they go out to the market and raise. And I saw that. I saw that in the words around leverage. It's all of a sudden you're like, wait a minute, what I was going to raise for like 2 months ago, I kind of actually don't need now, right? Which is exactly what you're hoping for. The product's a little bit further along. We've got a few more customers and you have more leverage. What I want to say is, in the formative stages, when you're first starting off and you're building, you had the idea 9 seconds ago, you are at your most vulnerable at every possible level. Ed, tell me if this makes sense. I have the idea 9 seconds ago and I turned to you and said, Ed, do you want to be my co-founder? And you're like, yeah, sure. Why not? Right? And you're like, let's split it 50-50. If I were to fast forward a year from now and I've been just working on the idea and I've got $30,000 a month worth of monthly recurring revenue, and I've got a product that looks like hell, but it's selling, right? It's working. And I were to say, Ed, do you want to join? You're like, yeah, sure. There's no way I'd give you 50%, not because you're not the coolest dude in the world, because I've created more leverage, more ownership, and less vulnerability. So I don't have to give up what I did a year ago.
Exactly. Oh, yeah. Why would you?
Correct. And you'll never have as much vulnerability as you do in year one. So to the founder that was asking that question, the further you can push this isn't just about fundraising, although I know that's your question. It's about vulnerability and leverage. Every day that goes by that you move that product a little bit further along, every extra customer you get, whether it's an early commitment they haven't bought yet, or the actual commitment and a little bit of revenue, gives you so much leverage. I say, put your foot on the gas, push to the point of exhaustion on every resource you can possibly afford to move this forward, and then ask for funding. We always say funding is your plan B.
Let me share some different perspectives here that I think founders can consider, because there's so many tools when it comes to fundraising. One, ideally, founders, and I've seen this happen, they build it, launch, and they're getting hyper growth. It is working out like gangbusters, and they're growing 10% week over week. They double their revenue month over month. And what ends up happening is they put out the word and they say, yeah, I think we're ready to raise funding. We just need to pour some gasoline on the fire. We're going to open up a 2-week window, and that's it. And all these investors, they get FOMO and they're climbing over each other, and bang, they are literally done in 2 weeks with presentations, letters of intent, due diligence is done. Everything is happening, term sheets signed, and then basically in 30 days, you got checks in the bank. That's method one. I've seen it happen. I know you've seen it happen, Will. You've experienced it too. That is ideal. But
yes.
Okay. But, well, what do you think about that methodology? Let's reinforce that for a second.
Methodology is great, but I think we have to attach it to a probability as well.
Yes,
right?
Exactly.
On the spectrum of probability, that is the best case scenario.
Utopia. That's what it is.
Yeah. Okay. And so, which by definition applies to a very small percentage of founders that go out there. Again, that is the panacea. But I think when folks hear that, they're like, oh, that's the baseline. Like, that's what I'm supposed to do to get those results. I'm like, nah, that's like Ed and I produce a song together. It was the most god-awful song ever. Produce a song together. We put it online and it becomes like the next Taylor Swift competitor, right?
Sure.
I don't know why we're Taylor Swift competitors. And I'm like, yeah, it could happen, but it probably won't. And so what Ed's talking about is that's the gold standard you'd want to move to. It's not necessarily where you'll wind up.
Well, I've heard founders get that advice and they're not in the position to do it, and they get sorely disappointed when it doesn't work out. And that's the reason I want to bring up the next scenario. Well, I think that founders should learn to be raising and show potential investors, you don't have to take a check. Just if you are a new founder and you're just getting used to it, I say put in the reps now, because this is what I see, Will. I see founders, they go, okay, I don't need the money right now, so I'm not going to worry about pitch decks. I'm not going to worry about what it takes. And then they get to a point where they have like 6 months runway and they're like, now I have to raise money. And they try and go out there. And then by the time that you're in front of founders, you get everything put together. And this was the reality. You know, when I was the general partner for a fund and I look at it and I had to work with investment committee, if you had 3 months runway, it's an automatic no. But so many founders put themselves in that situation. And also, you're going to get a predatory deal. Like if you are desperate for money, investors can smell that a mile away. You're not going to get a good deal.
Well, it's not even just a good deal. At which point the investors can smell the desperation. It also makes them less likely to invest.
Yeah.
You know, this isn't like people buying stocks where I'm kind of looking for like the underappreciated stock that I'm going to grow up. They're more like, okay, that one looks like there's some blood in the water. I'm moving on. I'm going to work on something that, like the one I'm looking for is the one that doesn't need me. I know that sounds kind of contradictory, because why would else would you be looking for capital? But you know, to the question that the founder had around, hey, my product's further along or would be further along when I raise. That's what, as an investor, I'd rather invest in you. Now, it's not quite that simple. I want to be super clear. It's not like if you go 6 months further ahead, then you rock, paper, scissors everyone that's not 6 months further ahead. Right? It's not quite that simple. It helps. It benefits you. But every deal is different. You know, I might look at one deal and I want to invest because I love the founders. I might look at another deal and say I want to invest because I like how far along the product is. I look at another deal and say I want to invest because I think the market size is so big. Totally different criteria, right? So it's not like if you move your sliders past one, you instantly leapfrog everyone else. Everyone's got a different thing.
Let's summarize then. So answering the question that we got in the chat. So what is your direct advice? What should this founder do?
I love pushing it as far as you can. However, let's look at this strategy very specifically. Let's say that bootstrapping is always plan A, right? And by the way, we call it bootstrapping. It's just called building a business, right? Like bootstrapping isn't some like special term. It's how a million people build companies.
It's the default.
Yeah. It's just called building a company. Like at Startups, not Startups.com, but Startup World, we've created this new term called bootstrapping, as if building a business organically is some unique path. Right. And I'm like, that's actually just how you build a company. But that's always plan A. And we push that as far as we can because it's the only thing that we have control of. Plan B in parallel is we run our fundraise. And if our fundraise works out, great. But plan A needs to exist independent of a fundraise because we can't control the fundraise. The timing could be off. The market could be off. We can't control for those things. So plan A is always what we can control. Plan B is an option, if you will.
And my answer would be yes, being prepared to fundraise and like just being ready, that is definitely do it, right?
Yeah.
You don't have to take the money. You can clearly say, hey, I'll keep you posted. And I know a lot of investors love it when they say, all right, keep me posted with the inflection points. And after they see 6 months of investor updates, just got our first revenue, we just increased by this percent, they start coming after you, Will. Like they will chase you down and say, hey, take my money, please. And that is such an amazing, it's the gold standard. It's rare, but that's such an amazing place to aspire to as founders.
I agreed. Let's grab this next question. We got another good one about being prepared for meetings in the chat.
All right, so take a look at this. How do you handle going into pitch, feeling completely unprepared, or if you feel unprepared, heavy imposter syndrome? And shared, okay, that's what we're going to be doing tomorrow.
I got a ton of feedback. I'm so glad you asked this question because Ed, let's open this up in a few different ways. Everyone has imposter syndrome, right? Like it always cracked me up. You know, Ed, when I was starting my career in the 90s, in the Stone Age, I used to think, I was like, 19 at the time. I used to think that there was like this Yoda of business that was brimming with confidence and had all the answers. And if I just did whatever the Mr. Miyagi trials were to become that person, I'd be able to walk in with all the answers. That person doesn't exist. Like it's the Yeti, right? Like it's so funny because you have this idea that I'm an imposter because there must be someone else that isn't. Everyone's an imposter. That's what's hilarious about the startup business is that by definition, we're all charlatan imposters. Right? We're all selling a dream that might not happen, and we're all guessing. Now, all that said, I also learned along the way how to go into a pitch and succeed with that feeling. Okay?
Yep.
Let me give you some backstory. So I'm 19 years old. I start one of the first web design companies. So it's essentially an agency. This is 94. Basically at 19, I still had pimples on my face. I look like I was 12. I mean, on a good day, right? I had like 6 facial hairs at this point, right? And I also, I joke about this, but I also have to give you the time period. In 1994, there was no Mark Zuckerberg. There's no such thing as a young, pimply, nerdy CEO, which actually just didn't exist. And so when I walked into a room, you want to talk about imposter syndrome? Number one, I had no idea how business worked. I was a theater major. And number two, everyone in the room looked at me like I was a circus act, right? Like they couldn't believe business words were coming out of my mouth. To be fair, neither could I. But my point is, I couldn't have possibly walked into the room with more imposter syndrome. But I had this one personal inherent trait that was just unique to me that I didn't realize at the time that worked beautifully for me. I am infinitely curious. I just naturally ask questions all the time. And it turns out that was the key. Here's me in a meeting. I walk into a meeting and the client asks me about something that I actually don't know the answer to. My first reaction, well, why did you ask me that? Like what was really on your mind? Okay. And what I just did is I deflected back to them. Now that did a couple of interesting things. One, it forced them to give me more information, which I didn't have, right? Instead of me stumbling, being, oh, well, whatever, help me out, give me more context, right? It also forced them to actually think more about their question, which frankly, a lot of people don't do. So for example, you're in the pitch and the investor says, well, how big is this market? And if it wasn't something I was super comfortable with, I would say to them, well, help me understand when you guys are looking at markets, what you're using to determine what a big market is. And what I'm saying is tell me the answer, okay? It worked a million times. It worked a million times because in a lot of cases, and by the way, this is just like sales 101, you want your customer to tell you what the words are that you need to say in order for them to buy, okay? And investors love to talk. So you give them the mic, they will take it. So when you're walking in, number one, don't feel like you have to have all the answers because no one does. The worst thing you can do is say, oh yeah, I know this and rattle off some answer that's complete bullshit and they can tell. The right way, when they ask you something you don't know, ask them why they're asking the question or give you a little bit more information to kind of open it up a little bit. Give yourself some time to think. The second thing is, if you don't know the answer, and I'll give you an example. Ed's the investor and Ed asks me, well, what is your customer acquisition cost, right, in year 3, right? Some super specific answer. Here's what I say. I never say I don't know. I say, I don't have that information in front of me, but I'll be happy to get it to you.
Right on. Perfect.
Right.
Perfect.
Ed, how do you see it? Like when folks are coming in and you've been on the other side because you've been the GP, the investor.
Yeah, and I'm going to just draw out some of the key principles that you shared, Will, because I think it's so important. Is everyone, all of you, that doubt that you feel is perfectly natural and will help you. It's that stress response that sharpens you and gets you ready. Too many founders misconstrue their doubt and healthy, appropriate amounts of, I'm scared and I want to be on top of my game, with I'm an imposter. So don't let your mind go on that runaway train and get to the point like, I shouldn't be here, I don't deserve this, I suck, all those things. Like there are 300 million people better than me. That's not the case. So one, it's natural. And then two, exactly as Will said, there are techniques that you can learn to self-regulate as you go in there, and you have them in the back of your mind so you can rely on them, like asking questions. Will, one of the things I would say as an investor, seeing through all these presentations, if someone acts like I'm not an imposter, they don't have that doubt, like I deserve all this, that's entitlement, and you're going to not get any attention whatsoever. Very few people, like when someone walks in like that, no, not going to happen. The second thing, Will, let me expand on you asking questions. It never hurts to ask questions before the meeting itself. I will always say, all right, thanks for taking the meeting. I'm looking forward to meeting with you. I just want to know, what are your expectations? How can I best prepare? And they'll tell me, just like you said, they give me the answers of what a successful pitch looks like. And they'll say, listen, we just want to go through your tech stack. We had a bunch of questions. We already like what you got. Let's have a conversation. I go, oh, great. Awesome. Now I know what to prepare for. And then I feel so much better when I'm in the meeting.
And that's a big thing. I think where we get stuck, we put ourselves in a hole, is one, when we try to answer questions that either we don't know the answer to or that we can't answer. I want to build on that as the next point. There are a million things about any startup that no one in the room can answer. No one in the room can answer. In other words, if the investor says to you, and you're starting Uber, okay? Well, how do you know that all the taxi companies that you'll be able to operate in other cities, even though all the taxi companies have a license? We don't know that yet. We're going to find out. That's why we're raising money to get into this, but we don't know that yet. And guess what? And say this in the back of your head, but never let it come out in your mouth, and neither do you. I don't know the answer, and neither do you, right? Because VCs love to, or investors, I keep saying VC, investors love to do this thing about making pronouncements about what will happen in the future when there's no goddamn way they could possibly know that, right?
Exactly.
But when you're the one with the check, it kind of gives you a lot of power. So you tend to express yourself that way. Well, that'll never happen in year 4. Yeah, there's no way you could know that. Now, as I got older And as I've been through this process more, I was able to be a little more confident in that, diplomatic, but more confident. So when the investor would say, well, there's no way that would happen with the taxi companies, I would come back and say, well, that's actually super useful information to know. Where are you getting that data from? Right?
Ooh, good one.
It was also kind of a backhanded view to the investor, but it put the onus on them to be able to show their work, not on me, right? And investors appreciate, not being a jerk, investors appreciate when you dig in, when you challenge them in an appropriate way, in a respectful way, because that's the kind of interaction they want to have. If you get steamrolled, it's like, who wants to invest in a founder where I just steamroll them through everything? That's not really what I'm looking for.
Exactly. Why am I giving you my money when I know, and if I've been proven right, I'm just going to spend the money myself. I want to invest in a founder that has got a contrarian approach, is coachable, but stands their ground. That's a really great thing. So these are techniques, which leads us to this next question. This is opening up a can of worms, Will, a good one. Pandora's box, whatever you want to call it.
Love it. I love the questions.
This next question, what are other questions that I should be asking investors while pitching? Let me start this one. This is the one question that has gotten me so far with investors. When right away, and it puts the ball in their court, I ask right away, can you just explain to me, how do deals get done here? What is the process? That's the first question that I ask, and they give me so much information. Put that in your bag and smoke it, or pull out ace card, whatever metaphor we want to use. What other pro tips you got, Will?
Okay, so let me build on that, because I think that is a quintessential building block. One of the things that I always would say to my co-founder when we were out pitching in the room, I said, our job right now is to extract questions as often as possible and shut up when they ask them. In other words, let's say we get to slide 2, it's the solution slide. And one of the investors in the room raised their hand and said, hey, well, what about this? Pause right. This is me talking to my team, my co-founders. Pause right there. They just told us what's important to them. This meeting is not about what's important to us. It's about what's important to them. At that point, that is a node that we need to lock into and focus all of the discussion until that person feels good. Now, a few things are going to happen there. Number one, when we focus the conversation on their question, it's what they give a shit about, which means they're going to pay attention to the answer, which is so important. Number two, they get an opportunity to see how we interact. See, when you just present for a half hour straight and drone on, nobody's learned anything. Yeah, they may have learned about your business, but they know nothing about you. When you get into a conversation and you go back and forth, it changes everything. And Ed, if you'll indulge me, I'm going to give you another anecdote. We go into a pitch, okay? And we're pitching Founders Fund, one of the preeminent Silicon Valley funds, Peter Thiel's fund. We're in the meeting with one of the founders, and we get to the title slide. Ed, we're not even at the problem side. I mean, literally the name of our company in our tagline, okay?
Nice.
It
Okay.
was essentially what is a firm today, not my company. A firm basically copied it. And so it's buying stuff, using payments. We get to the title slide, and this partner who's a trip says, oh, so you guys are loan sharks, I guess, right? And I'm like, come again? He's like, yeah, you guys are loan sharks. You guys just take money from people. You're loan sharks. And I'm like, pause right there. Clearly, our guy has an issue with the business model before we've even explained it, right?
Yeah, investors get triggered. That happens.
Man,
Yeah.
I get it, right? But here's what I'm trying to say, and this is so important. In my mind, what I say at that moment is nothing matters. We don't need to make it past the title slide. All we need to do is focus on what he cares about. That's it. The rest of this meeting is about that question and that concern. If we don't get past that meaningfully, the rest of the deck doesn't matter. But that goes for all the other slides too. So in maybe the weirdest series of events that I've ever seen in my life, and I've seen a lot, we're sitting there talking, and I'm like, yes, we're loan sharks, but we're the nicest loan sharks because we do things in the right way. So I don't give it to them, right? I don't fight them on loan shark, right? But I push back. And I say, but we're really good at this. Not at being loan sharks and being predatory, in finding a way to make sure people can pay it back on a schedule that makes sense for them so they feel good about coming back. Our job is to keep helping them, not to take their money. And so he turns, he twitches, and he turns and he's like, do you like pizza? And I'm like, okay, it's 10 in the morning. I'm like, yeah, I like pizza. He's like, will you come with me to get pizza right now? I'm like, wait, what is happening right? I'm not even kidding. This is 5 minutes in the meeting. I get up with him. We leave the entire room of people, me and this partner, go into their break room. I don't know why they had pizza there, by the way. And he just starts feeding me pizza and asking me questions. And this is the weirdest thing I've ever seen. It's like out of a movie. We're just having pizza, and he's asking me questions. He's like, hey, let's head back in there. We go back in there, and everyone's dumbfounded. No one has any idea what the hell just happened. And he's like, we're in. By the way, we didn't even go through the deck. He literally has no idea what our business actually does. But I use this as and that's Founders Fund, right? That is a major firm, right? I use this as an example to say a couple things actually happened there. Number one, I pushed back, but I wasn't a jerk. I pushed back. I let him have loan shark, but I explained to him in his terms what that would mean and why that's okay. He wanted to mess with me. He wanted to spar with me. But for some reason, his pizza dance or whatever it was, he liked me. He's like, hey, I like who this guy is. I want to invest in them. He came back. To this day, I still don't know why, decided to invest, and they became an investor in our deal. My point to that is when you're going into these conversations, it's not just about motoring through the slides. It's not just about proving the problem, et cetera. It's about building that relationship. And for a lot of people, it's that important.
To share my context, I have a similar crazy story, and I'll keep it short because I want to give some more pro tips. But I've been pitching to a group, and then they've said, come with me. What are you doing this afternoon? We've driven, and they've taken me to their best customer and another person. I had to pitch again, driving back. This happened in Louisville, Kentucky. Driving back, they get the phone call. We're in for $250,000. Literally in the car. It's just surreal, but that's the whole point, is that you never know what's going to happen. Let me give one more pro tip. I'm curious what you do in this situation. One of the mistakes that I used to make when pitching, I used to ask after every slide, what do you think? And it killed the pitch. They just looked at me dumbfounded. I'm like bombing like the worst comedian, giving like the crappiest set. And I'm just shrinking, like I'm wilting in front of them. And I did this because people were telling me, they were coaching me and saying, you have to ask questions and get them involved and see how they respond and all those things. So I just default, what do you think? Then I got to the point where I asked strategic questions like, when have you experienced this? Or how many people with this problem do you know? And I just calibrate myself and I ask more, I'm going to say leading questions, a lot of yes and no questions, to at least give them the opportunity to ask a question that I might not have considered. And I pause for a moment. But the open-ended, what do you think question, I tell you, it's never worked out for me, Will.
I might be a little bit more pointed with that. What do you think about this market size? What do you think about that part of the customer problem? Just make it less open-ended. But I do at least like to pause between slides to make sure the audience is still paying attention. Because by the way, they're probably not. They're going to see 10 more of these. It's boring as hell. Right?
Oh, yeah.
So I always try to make sure my audience is still following me. Last point, pro tip that I rarely see anybody ever have heard of or use that worked beautifully for me. I create something that goes along with my pitches, my presentations. That's an FAQ. And I always say, here is an FAQ of the 5 questions that everyone asks me. So I've got basically a handout.
That's good.
Here, it does 2 things.
Yeah.
It basically forces them to ask those questions, which are the questions I want them to ask because I'm totally prepared for them, right?
Nice. Yeah. Oh, yeah.
And the second thing it does is it avoids them asking the same questions over and over because they're like, oh, these were all beautifully answered, okay? It makes you look infinitely prepared. And for what I was doing for a lot of my businesses, there were some complicated things to it. And I'm not even kidding. I had the FAQ doc and then a 300-page Bible below that. That was the diligence that's behind that FAQ doc. Now, if I'm being honest, 299 of those pages could have been blank paper, and it just looked so intimidating that when I put it on the desk, they were like, geez, I don't even want to ask a question now. I don't want to dig into that thing. It was almost a prop, but holy cow, it was effective. It showed that we knew what we were doing, but it helped us control the pitch.
See, Will, I've been doing this for like 25 years, and I've never thought about that. It's something I learn every single time we have these conversations. It's great. Okay, here's another question. And wow, this is lively, Will. Like the questions just keep coming. Let me read this. My co-founder is the only investor and highly skilled in a specific area, but she lacks strategic thinking and vision, which creates challenges in our collaboration. As the COO and co-founder, I'm focused on execution and driving results, but her tactical approach without clear vision makes alignment difficult. Since I'm not willing to take over the CEO role, she will be more likely to raise funds. How can I address this situation effectively?
Well, let's talk about that. This happens all the time. I mean, this is kind of more the norm.
Oh, yeah.
Yeah. It's kind of like a marriage. It's really difficult to have a marriage that works. I mean, like the outlier is one that works. Everyone thinks like that's the baseline, and the outlier is one that doesn't work. Same thing with co-founders. The outlier is where 2 co-founders love each other. But this is a very complex dynamic, okay? And what happens is, a lot of times we make this bet, we start working with that person, and we start to know some cracks, right? Again, this is I use the analogy of getting married, right? It's the husband's leaving the toilet seat up kind of thing, right?
Yeah.
And you're like, okay, I don't love this, right? And so my point here is there's only so far you can take it where you have a very cogent discussion, because most people don't feel like they don't deserve their position. They may feel like, yes, some imposter syndrome, but when you give somebody the CEO title or the COO title, you're going to get it back out of them from their cold, dead hands. You know what I mean, Ed?
Totally, all the time. Yep. Let me just reiterate. Marriages take work. Not to make this about marriages or relationships, but one of my mentors said, Ed, as soon as you say, I do, all the way up to the point in time, it's all been about romance. And that's
Right.
what co-founders do. It's like, oh, we're going to change the world. We're going to raise money, all these things. But he said to me, as soon as you say I do, your marriage is based on forgiveness. That's the only way that you're going to get to it. So it's how you work through, the challenges and the reconciliation, all that stuff. So these things are going to happen. So first, it's normal. But Will, how does she deal with this situation effectively?
Let's get tactical. Get tactical. So what we were saying is, hey, great, it's for everybody, but I actually need to know what to do. Do not try to boil the ocean with this issue. A lot of people feel like there has to be some pronouncement or big discussion or big summit between the two of you, and you have to agree on all issues. It just doesn't work like that. What we do is we chip away at the issues. You mentioned there's certain things where she's not seeing things properly. Totally makes sense. Address those a little bit at a time. It would be awesome if you could sit down with somebody and have, like I said, this cogent strategic decision and change everything. It never works like that. Here's what does work, because I've been through this a million times. Here's what does work. Let's say that she's missing a couple of key attributes that you would appreciate. Okay, fair enough. Let's chip away at one. Let's just pick one and chip away at that one. A lot of times it'll be like, here's a CEO, and this isn't your case, but help me out. It'll be a case where the CEO understands product and design or development really well, because maybe they're technical, but they don't understand sales. That doesn't mean you need a new CEO. It means you need somebody in sales. So often part of chipping away at this is starting to divide up those responsibilities, the ones that you're not so sure she's good at, and put them in the hands of other people. Now, the first thing people say is, okay, that's great, but it's just the two of us. We literally have no money to find anybody. That's okay. Part of chipping away at that problem is identifying that maybe those things are someone else's job. I've been the CEO of 9 different companies. In every case, I knew there were parts of my job that I wasn't good at, but I didn't want to be called out for them. So the smart thing would have been, had I had co-founders that were, my co-founders laid the hammer on me, right? So I didn't have the luxury. This is how I wish I was treated. If they had said, hey, Will, you don't love sales, I actually do, but you don't love sales, which is perfectly fine. It's probably not where we need to be focusing your time anyway. Give me a little bit of an out. How do you feel about, in the future, when we can afford it, bring somebody on to focus on sales? See, there's something very important about that. That gives me the space to say, hey, I think that would be a good idea. What I've actually just said is, maybe it isn't something I'm good at. But you weren't attacking me. You were saying, hey, what do you think about expanding this role or supercharging this with another hire? That makes me feel like I'm empowered to say, hey, okay, maybe it's not me.
But at least, Will, you had a good enough relationship to even have that conversation where someone could ask you a question. And I think if we back it off even more, a lot of co-founders don't practice having critical conversations.
Right.
One thing that I appreciate about you, Will, is you and I can have a critical feedback conversation. I can say, this is important. Or you can say, hey, I'm noticing something and I'd like to have this conversation with you. And I go, all right, I'm going to turn on the switch and now I'm ready to have an exchange with you. And if you're not practiced in that, then bringing stuff up is going to even feel more foreign.
I agree. It all comes down to who the person is. And for the founder that asked the question, pretty sure I saw you yesterday in my workshop. So I think you're on our platform. DM me tomorrow. Let's talk about exactly what the problems are. And I will give you much more specific advice. When we talk about this kind of stuff, there could be a million different variants of where that delta is between you. And they all have slightly different answers. Right? So as we start to talk about more specific challenges, I just made up the sales thing. That might not even be the issue. If you were saying, hey, I don't like how she's taking more money out of the company and salary than I am, that kind of thing, that's a totally separate conversation. But a lot of the advice that we give at Startups.com or even on this channel is about really specific challenges. And I'll say this, it comes down to personalities. And Ed, you touched on this, right? You said, hey, when I have a challenge and I bring it to Will and we get into it, Ed and I respect each other a lot. And I've had enough reps with Ed that I know if I have a challenge or he has a challenge, it's not going to break the bank, right? And we both want to find a solution. That changes when one party doesn't want to find a solution, doesn't see that anything is wrong. And I think when you come at them and do anything that looks like attacking them, you lose them. But if you give them the opportunity to be able to say, hey, couldn't this be more awesome if we worked on this together, and give them the opportunity to succeed versus defending, it changes everything. So how we couch it means everything.
And to just give some reinforcement, again, it's common. When I was in China and I was doing workshops, so I had the pleasure of doing executive coaching with pretty much someone from every Fortune 100 company in China. And inevitably, we do this forum and someone stand up and they complain about their CEO. First, the CEO is not in the room. So it's difficult to address that. But I would explain to them, being a CEO is one of the loneliest spots in the company. And where is the leverage? Who can have this critical conversation? Because if you're standing in this meeting with me and you can't have that conversation, we have to figure out how do we get them to the table to feel safe, psychological safety, because there's a lot of pressure.
Right.
And then after that, it's all about, Will, the things that we're talking about in terms of what are the skills and even the ability to just say, hey, can I sit with you and just share a challenge that I'm experiencing in a non-confrontational way? And I'd like to hear your perspective. I'm going to share with you my observations and how I'm feeling about it. And then you probe and you say, okay, what are you seeing? And what do you think about it? And they say, I don't know what you're talking about. You're dumb. Like, get out of my face. Then you know what you're dealing with. But sometimes they go, I didn't know. Thank you so much for bringing it up. And then you can say, what can we do to co-construct a path forward together and negotiate? And you're absolutely right. You cannot solve it in one conversation, but you can start the conversation. What is the path to solving it and seeking resolution?
I always like to be able to say, wouldn't it be better if versus you suck and here's what's broken?
Nice. Yeah.
Wouldn't it be better if we had somebody else helping out with sales? Yeah, it would. Versus, hey, you kind of suck at sales. We should get somebody else. And look, I'm truncating that conversation in just a few words, but people can feel the difference in those two approaches. And I think how you approach it, the words you use, and more importantly, not putting that person on the defensive. It buys you nothing, right? And it almost guarantees failure. And I'm always very mindful when we coach founders about how to approach these situations, about how to do that.
And I've had a few reps with this founder, and I just want to encourage you, founder out there, I don't want to call you out. I think you're fabulous. I've seen you operate and present, and I don't think you could hurt a fly with a confrontational conversation. So I just think it really comes down to you learning the courage, getting coaching from Will, take him up on that offer, and then taking a risk to step out and learn these skills because they're going to serve you for the rest of your life.
You bet. You bet.
Will, we got through one question and then multiple sub-questions today.
We got through the best questions, which are your questions. Right? Everybody in the audience, our founders.
That was fun. I had a lot of fun. It just keeps getting better and better. Appreciate all of you out there. Will, what's your final encouragement for everybody who's going to watch this, who's watching this now or going to watch the recording?
What I loved about today's questions were they weren't just about one thing. It was, how do I pitch investors for funding? It was a lot of the stuff is really the more personal side of it, about how do I feel about the problem? How do I think about myself as I'm going through it, et cetera. Most of what Ed and I do all day is some basic like couch therapy about what it means to be a founder and how to like mentally go through this stuff. Ask those questions. This shit is hard, right? Mentally, as founders, you do feel imposter syndrome. You do feel static with your co-founder, et cetera. That is part of the process. And you're not alone. We're here to help you understand how a million other founders have dealt with that. There are processes to follow. And if nothing else, we're here to let you just vent and just say, man, this is pissing me off. Let me just tell you, and trust me, we get it.